Peter Major from Cadiz Corporate Solutions now joins us on the desk. Ashraf Mohammed is still with us. Peter, thanks so much for joining us.
My pleasure.
Diversified miners looking awfully cheap right now. Anglo-American looking really attractive. The big question is, should you have exposure to the diversified space, or should you go for pure plays such as the platinum sector, which has been in the doldrums since the beginning of the year? The gold sector is, of course, something that's very controversial still today. And should you perhaps be delving into Kumba iron ore, which is a pure iron ore play?
I think investors are split. Half of them are like me. They like bottom fishing. They like finding something that is so low down, they're sure it can't go lower. So we buy the Japanese index or the mining financial index. or
How's that working out for you, Peter?
This year, very bad. Then you get the other half, the investors. No, they want to go when something keeps hitting new highs. And boy, if you followed that theorem, you'd be buying gold, like Ashraf has said. I think every time I'm on the program, he says, do it, and he's right. I just can't bring myself to do it, and I managed to
Gold companies or gold, direct exposure to gold?
You know, I've been saying for a long time, if you want gold, especially for the average investor who's not going to sit around and stare at it every day, just buy gold. The mining companies are too risky. There's too many things to go wrong. Costs go up, they go on strike, the manager quits, bad grades. Whereas with the gold price, what can go wrong? It's only the price.
Absolutely.
Okay, so Ashraf, what is your concern when delving into the diversified space versus the pure space? Because we know Anglo-American and BHP should be part of anyone's portfolio. At least that's the thinking.
Well, you know, of any large portfolio, you have to have those two. But the reality is that the single commodity companies have done exceptionally well. Platinum is the one single metal that I really don't touch right now. I don't think platinum's that attractive as an alternative to gold. People see gold as a currency. They don't consider platinum.
Are you still advising Peter Major to buy gold at these levels?
I think that we still have bad news coming out of Europe, so I'd be buying gold as a hedge. I wouldn't be buying equities.
I always wonder where all these poor people get the money to buy. You know, if you lose all your money, if your portfolio falls 80%.
Quantitative easing, excess liquidity in the market, Peter. Yeah. Haven't you been watching?
No, I have. and especially, who's the guy, Dr. Doom and Gloom out of Hong Kong?
Mark Faber.
Yeah. Look, I think what he says makes sense, and he's not that extreme. He just says there's only one proven way of getting out of a debt crisis, and it's print your way out. And we've seen examples of that for hundreds of years, so I don't think anything's going to change. Yes, they're going to print their way out, but my view is gold has already discounted a heck of a lot of printing.
You know, Pete, I'd almost disagree on that basis, because I think we're going to get a lot of inflation coming through. The fact that the Fed has put interest rates on hold until mid-2013 is, to me, indicative of the fact that they will allow inflation to run up to 6 to 8% over the next 2 years without any intervention. And that's certainly going to be an impetus for gold to trade.
Negative real interest rates, is that not also what really prompts quite a bit of buying into gold? Because the cost of holding gold then becomes far cheaper, and that's what prompted a lot of buying into gold in the early 1980s.
It's a fantastic environment, and as Ashraf says, whenever in our history did we get it telegraphed and guaranteed, and we get continually...
a declaration of low interest rates.
I'm going to keep interest rates negative for the next 18 months. So you're right.
Yeah.
I just think he's been saying that now for a year and a half. Gold's gone up, what, 80% in a year and a half. I just think it's more than discounted that. But anybody can be wrong in this environment.
Gold miners for a very long time have not, of course, been profitable. We're starting to see things changing here in South Africa. Do you think that this can be maintained, and do you find any appetite right now? Do you have any appetite for these gold shares?
I don't, because the higher the gold price goes, the more afraid I am that when it turns, these guys, their costs have been ratcheting up right behind the gold price. Now, that being said, I think the gold index, the South African gold producers, have outperformed the South African platinum producers by 100% in the last 3 years. And we always thought these platinums were quality, huh?
Yeah.
So gold shares haven't done that bad. It's just that compared to the gold price, they have.
So Ashraf, if you had a choice right now, you said platinum you haven't been delving into, Anglo-American, BHP, yes, and what about...
No, I said Anglo-American BHP
should be part of your
large portfolio,
yes.
Balanced portfolio. But if I had to make a call, Kumba iron ore has been under a lot of pressure recently. My preference is still to play coal. I think coal, despite its green energy issues, is attractive, and then I'd play Kumba through Exaro.
Okay, so tell us what your resource portfolio looks like right now.
It is the dullest, boringest, poorest performing portfolio. 3 shares, Sasol, Billiton, Anglos, and a whole bunch of all Z40s.
So tell us why Anglo-American at this stage? It is looking quite cheap. Have you been accumulating at these levels, a PE of around 9? We know that it's looking quite cheap. And it's interesting that the market hasn't actually rated the stock.
I bought a few above 300, and I bought maybe too many below 300, like some other pros we know that wear red on certain nights. But yeah, I've done this before. I've done this in the 90s, and I've done it in the 80s, and at the end, I came out very happy, and I don't see any reason it's going to change. I still think by the end of the year, a portfolio of these mining financials, geez, if it can't make a guy 10% this year, but we started from a decent high base, it's probably going to be tough to show a positive 10%.
About the coal sector, I mean, Ashraf just alluded to it as well. Do you have exposure to coal? It seems that you don't. You said, well, I mean, within the diversified space.
No, I've got exposure to coal, but I've regretted it. It's been the small cap coals, and I've really burned on them.
Small caps, such as?
Well, should we say coal of Africa? Should we say West coal? And
not optimum coal, because that would have been interesting.
Yeah, that was too easy.
Okay, and also just delving into the overall commodity space, Peter, if we do see a double dip scenario, if we don't see more stimulus out of the US and a possible default out of Europe, and I know that I'm sounding like a doomsayer right now, where does that leave commodity stocks?
They're all vulnerable, even the ones that are bombed, even Sasol, even Anglos, even Billiton. If these commodity prices come off, they'll come more. I'm playing a relative game here. I think they're going to come off a lot less than the all-share, and they're going to come off a lot less than the other stocks. But yes, they will come down. And I am worried these commodity prices are very high. And I think we're flirting with the double dip. I don't think we'll get it, though. I think we're just flirting, and I think your inflation will come through once the real world realizes it's not a recession, so it's going to be inflation.
Okay, Ashraf, and also when you see some of the rhetoric with regards to the copper market, interesting there, we're seeing fluctuations because of supply-demand issues. We've seen that in the Brent crude market as well. So it seems that a lot of speculation has been priced in. How does this create a concern for you with regards to the exposure that you've got within the resource space?
Not really. My copper exposure is almost insignificant. I have some Sasol exposure, but I've actually taken that down because my view is the whole Sasol story seems to be fluctuating right now. So my view was to reduce that exposure and pick it up within Exaro and some of the coal shares. As Peter's mentioned, they are small in South Africa, but I do see the potential for growth in revenue coming out of those businesses.
Let's touch on something like Metarex. We know that it's going to be delisted later on this year. There's a lot of Chinese interest. We saw Pan-African coming out with strong results in yesterday's session. There's a lot of these smaller players that seem to be quite interesting and also seem to be getting a lot of the attention from foreign companies and multinationals.
See, this is the lure of the small caps, is they can rise multiples much quicker than the big caps. And we've seen that with Gold One, we've seen that with Pan-African. They definitely had the gold price in their favor. I think they're both well managed, but heaven knows where they'd be if gold was still 1,100 today, would they have been up like they are now. On the other hand, coal shares, coal price has done pretty well, but the small cap coal shares have just fallen in a heap. Small caps, they're always dicey. You know, I think you got less than a 50-50 chance of getting them right, whereas the big caps, I think you got a better than 50-50 chance.
We actually have Abu from Louis Trichardt on the line and also wanting to delve into small cap coal stocks. A very good evening, Abu.
I have a question for Peter Major.
Go ahead.
I bought West Coal around 122. It's now around 72 cents. Should I hold it or should I bail out now and cut my losses?
Okay, thank you so much, Abu, for that question. So I bought West Coal at 122. What should he do?
No, it looks
bail
like
out or hold on for better days?
Look, this is pretty experienced management. They do know the business quite well. A lot of that price decline was one bad contractor, and we know what contractors can do. I'm holding on. It's risky to keep adding more. I have added a little bit here, but yeah, I think hold on. I'll be very surprised if they don't regain to 120 within 12 months.
Are you worried about another financial crisis coming to the fore, Peter?
No, I think we're in the middle of it right now, and we're going to deal with it.